Hi dear traders. Today is Wednesday, June 26. Let's discuss the chart for the euro and the pound sterling and try to focus their dynamics. The euro was trading under pressure for the whole day yesterday. The consumer sentiment index was released in the US. The index surpassed the consensus, so the euro weakened more in the second half of the day. Eventually, the buyers entered the market at 1.0695. I highlighted this level and recommended opening long positions from there. The euro rebounded by 20 pips, as expected. The bears won back all their losses incurred on Monday. All this indicates that the euro-dollar pair is set to trade sideways. The British pound did not show interesting moves. The pound-dollar pair reached a one-week high. Then the pound came under selling pressure and sank to 1.2674. I also recommended opening long positions there. The buyers returned to the market. The balance of trading forces was maintained. Now the instrument is poised for an upward correction. Before making our intraday focus for today, we should look at the economic calendar. The forward-looking consumer climate index for Germany is already available. The index is worse than expected. The negative figure went down to minus 21.8, though analysts had projected minor improvement. The GfK report could not support the euro. The report on unemployment in France is no importance. Later, ECB chief economist Philip Lane is due to make his comments. The UK retail sales will be published today, but the data will hardly support the pound sterling. As for the US dollar, new home sales data is rather important, but it will have an impact if the data differs from the forecast. I guess the market will take on notice of the data. No speeches by third policymakers are scheduled for today. All in all, the trading day is going to be boring with popular instruments trading sideways. Now we're analyzing technical charts. For the euro-dollar pair, I've spotted interim resistance at 1.0701. If this level is tested with a false breakout in the first half of the day, it will be an entry point for long positions. The price might recover to 1.0733 and even 1.0761, which is the upper border of the current sideways channel. From this level, I will plan short positions because of a downtrend move of 20-30 pips. I will consider short positions from 1.0733 on the condition of a false breakout. If the bears grab 1.0701 followed by the opposite test, this will increase downward pressure. As a result, the lower border of the sideways channel will be tested. This level coincides with 1 month lows at about 1.0672. From this level, I'm going to plan long positions during a dip, bearing in mind a rebound of 20-25 pips. It would be better to open larger long positions after the test of the 1 month low. If so, I will go long at 1.0642. As for the British pound, the technical picture remains as yesterday. If the pound-dollar pair declines, the buyers will enter the market at 1.2670. After a false breakout, the instrument will offer a good point for long positions. In the case of strong retail sales data, traders could rely on the update of 1.2700. From there, I will plan short positions with the aim of retracing to 1.2670. If the bears are not active at 1.2700, I will add more long positions with target at 2732. If this plan comes true, I will open short positions bearing in mind a drop of 25-30 pips. The next level to pay attention to is 1.2670. It's assumed the price rebounded by 10-12 pips after a false breakout. Once the price settles below this level, the instrument could drop to 1.2646 and 1.2622 during a sell-off. From 26.22, I will plan opposite long positions bearing in mind a 20-25 pips upward correction. Besides, long positions at 1.2646 and 1.2670 will be possible on the condition of a false breakout. Thanks for watching and good luck.